Hi, my name is Paul Wessels, President and CEO of Western Copper and Gold. Western Copper and Gold has been developing the Casino Copper Gold project located up in the Yukon for a little over a dozen years, but really it's the last few years that have been really exciting. I'd like to share my presentation with you. I'm going to share that right now. So welcome to Western Copper and Gold. As this title slide says, we're developing Canada's premier copper gold mine. It's actually Canada's largest critical mineral mine located up in the Yukon. And really, it's the critical mineral mine because of both the copper and the molybdenum that's present in the deposit. I will be making forward-looking statements, so please review this before making any investment decision. So first of all, a little bit of a corporate overview. First of all, we're listed on both the TSX and the NYSE American under WRN. We have a pretty enviable cash position mid-year, around $36 million in the bank. We're going to end the year at well over 20. Share price has been sort of sitting at about $1.70 to $1.80, which gives us a market cap a little under 300 million. Top shareholders, Rio Tinto and Mitsubishi strategic investors. I'll be talking a bit more about them. And then some good blue chip names, Fidelity, Copernic, Franklin. And as you can see, board and senior management have a little over 4%. So as I said from the onset, this is a project we've been developing for a little over a dozen years, but really it's been the last 3 years. And it started in 2020 with a significant resource expansion, brought this into really a world-class in terms of overall size, issued a PEA in 2021, feasibility study in 2022, which I'll be, digging into here shortly, and then brought in strategic investments from Rio and Mitsubishi, which are obviously critical to advancing this project. Right now, we're in the middle of permitting, and that's really the big push in terms of moving the project forward as we speak right now. So first, let's talk a little bit about Rio and Mitsubishi. And so Rio Tinto, the background of this, we started talking to Rio Tinto in 2020. They became an investor in 2021. And really at a high level, it's a private placement. So they put in $25.6 million for 8% of the outstanding shares. With that, we signed an investor rights agreement. And the investor rights agreement was really around them coming in and doing some diligence, doing a few more things that they wanted to do, a couple more I's that needed to be dotted and T's that needed to be crossed. To make sure that work was done, they've got we set up a technical committee, which they sit on. They have a non-voting observer on our board that can turn into a full board member if their ownership increases, and they have the right to second people into the project. Now, all of those rights actually expire this November. So, we're certainly talking to Rio and talking about what's next. But, we've got a very good relationship with them, and, they're very, very happy with the project so far. Mitsubishi, we brought in 2020, this year, 2023, in March. They came in very, very similar. And then, again, the history of our relationship with them, they showed interest in the project. They did their diligence. Then we talked to them about becoming really a similar investor to Rio, come in with a strategic investment, which they did, $21 million for 5% of the outstanding shares. They are now sitting on the technical committee as well. They don't have the observer, but they do have the right to come into a board member, and they have the right of first negotiation on the offtake for the duration of our agreement, which is 2 years, and so it expires in March 2025. And, what are we working on? As you can see, most of the work with Rio has been complete. This is very much diligence. It was a MET program, there's a drilling program, looking at tailings, looking at the feasibility, lots of work on permitting and Indigenous and community relations. That work is ongoing in terms of an internal review. And as I said, we're now chatting with them about, really what's next. Mitsubishi drilling program is ongoing. The drilling's done. We're waiting for the assays. The next step is going to be a MET program with them, and then some engineering review as well. So let's just quickly talk about copper market. I'm not going to spend a lot of time here, other than to say, there's lots of news articles on this as well. Really, this is about electrification and defeating global warming. And when you look at the amount of copper we're going to need, and I like this statistic, we're going to need 12 million tons over the next 10 years. Previous 2 decades, we only added 7 million tons. Future for copper looks very, very bright. This is why, we're getting the attention that we're getting from the likes of Rio and Mitsubishi. The other thing is critical minerals, and this is something that's getting a lot of press, certainly here in Canada. And when you look at our casino project, part of it is the copper, part of it is the molybdenum. Both of these are absolutely critical minerals in terms of creating and enabling the energy transition that we're trying to work towards, over the next few years. Project itself, talk about the project, talk about the deposit. So it's a true copper gold. As you can see, 46% of the value from copper, 34% from gold. If you're looking at overall numbers, adding these all up together, you're looking at 10.8 billion pounds of copper, 21 million ounces of gold. So significant on both the copper and the gold side of the equation. When we look at this and stack this up across, the world of copper gold projects, so these are undeveloped copper gold projects, just sorted by size, and everything in the brown copper color is controlled by a junior mining company. Everything in gray is controlled by a major. So as you can see, we're actually the fifth largest copper gold project controlled by a junior mining company. So puts us in a pretty rarefied air. If you're looking at this from a gold perspective, just the gold puts us as the 8th largest gold deposit in the world. So, 21 million ounces of gold, that's pretty tough to come by. And so obviously lots of attention in the gold space as well. So digging down into the project, first of all, looking at the deposit itself. So the deposit it's a copper porphyry deposit. It's weathered copper porphyry. This part of the Yukon was not glaciated during the last ice age. So you get this weathering profile. So the surface of the deposit, enriched in gold, depleted in copper, that gets mined off first, goes on to a heap leach reserve. That's 210 million tons at a little under 0.3 grams per ton gold equivalent. Right at surface, not a very exciting grade, but right at surface, we put that onto a gold heap leach. The real value is beneath that in the mill reserve. As you can see, 1.2 billion tons at 0.4% copper equivalent. Now, the key to understanding this deposit is the core zone. And the core zone, for the geologists listening, this is a breccia. It runs quite a bit higher grade. And, when we look at this core zone and, when we signed our agreement with Rio in 2021, the next thing we did is we did drilling of the areas that Rio wanted to drill. What did they want to drill? They wanted to drill the core zone. They wanted to make sure that, everything in terms of the lithology, in terms of the contacts, in terms of the full geological model really was well understood. But you can see the drill results, close to 300 meters of over 1% copper equivalent, 66 meters of 2.5% copper equivalent. These are spectacular grades. We can put a resource around this. When we put a resource, you're looking at 430 million tons, 0.58% copper equivalent. That is an exciting grade. That's where you start mining. That's what drives the good economics of the project. That's what attracted the Rios and the Mitsubishis to get involved with us. And when we look at the grades coming, out of the mine and the first two bars, the first bar shows the first 4 years of mining, and then the second shows the life of mine. You can see first 4 years, you're looking at close to 0.65% copper equivalent, and then it drops down to that 0.4 life of mine. Beneath that, Copper Mountain, Gibraltar, Highland Valley, these are all, older mines in Western Canada. They're all mining 0.2 to 0.3. Even the newer mines, Mount Milligan, Redcrest, they're running 0.4 to 0.55. We're sitting very, very nice, starting at that over 0.6 and then, averaging down to 0.4. From the feasibility study, 2.3 billion net present value, 18.1% IRR, absolutely spectacular returns. Part of that is that high grade, which I showed on the previous slide. The other key takeaway here is the strip ratio. You're looking at a strip ratio of 0.43 to 1 life of mine. That high grade also leads to a very fast payback in 3 years. Currently, the feasibility study is based on that 1.2 billion ton reserve. That's 27 years. I'm going to point out that is 1/3 of the overall resource. There's going to be a mine here for 80 years. Life of mine cash flow of 10 billion, which is significant as well. The other thing is that was from the feasibility study. That's using conservative long-term prices. We look at spot. spot. So copper hasn't really changed much. Gold, we did this a couple of weeks ago. Gold hadn't really done the moves that it's done recently, sitting at 1825. But molybdenum has gone up, significantly, and the Canadian dollar has dropped significantly. Those two changes, just those two changes, and a little bit of the change in the gold price, gives us a net present value of 4.5 billion and an IRR of a little under 25%. I mean, this really shows the sensitivity of this project, shows the robustness of this project, and shows, when we did the feasibility study, when you look at that base case, that's a conservative base case. And, even in today's environment, it's sitting quite a bit nicer. That early high grade also shows up when we look at cash flow. You're looking at cash flow of $950 million per year over the first 4 years. Then that drops to around 500 over the life of mine. Significant cash flows. The other thing I like to look at is the overall production. You're looking at a gold equivalent of close to 1 million ounces per year over the first 4 years. So it gives you an idea of the overall scale of the mine. Looking at the cash costs, I mean, usually people report cash costs and net of byproducts. That's negative 80 cents. For a project like this, it's a more fair way to look at it. It is in terms of co-product cash costs. You're looking at $1.50 per pound of copper, $800 per ounce of gold. Those are cash costs that, suggest you're making money in essentially any commodity cycle that you can imagine here moving forward. Capital cost is 3.6 billion Canadian. Want to point out this is from last June is when we published the feasibility study. So the cost inputs went from January of last year. So January of 2022, I want to remind everyone that January 2022, steel prices were peaking, diesel prices were peaking. So this is a high on the input cost, capital cost estimate. We feel very, very confident about this. We did a quick back of the envelope a couple of months ago, and then really all the numbers held up. So, we feel very, very comfortable that this is an accurate capital cost moving forward. So I'm going to switch and talk a little bit about ESG. Certainly we've been up in the Yukon for a number of years. We have actually won some environmental awards. We've got lots of work with the community. But more importantly, I'd like to give some specific examples of really why do you do ESG and why it pays off. So first of all, let's talk about our tailings facility. So, this is back in 2018. We had a tailings facility as part of our design. And the First Nations, expressed some concern. Why? I mean, it wasn't anything particular about our tailings facility. It was really the fact that, there was 2 big tailings dam disasters in 2017 that really shook everybody's confidence in these. So we said, fine. And we went and we did what's called a BAT study, Best Available Tailings Technology Study. 2 years, we started with 495 different options, whittled it down to what I'm showing you here. Lots of good engineering here, absolutely. But I think more importantly, this is a design now that has, the input and the consensus of not only ourselves, but ourselves, the First Nations, also the regulator and the Yukon government that participated in all of that work. Next, I want to talk about the access road. So, I mean, now we're going back to 2017. As the picture shows, the Prime Minister of Canada, guy standing next to him was the Premier of the Yukon, made a major announcement, 3 roads to resources in the Yukon, including the road to our casino mine. This is great. It's always exciting when government makes announcements like this. What counts is the follow-up. So in order to actually build these roads, they need, the governments needed to have binding agreements with the First Nations. They needed to bring it through the regulatory process, and they needed to award that contract. Well, I'm happy to say on the first part of the road, so the first 20 kilometers, all of that's happened. The award went to a joint venture with the local First Nation. They started construction on that first 20 kilometers 2 years ago. That's now, they just finished completing it earlier this year. And so this is an example of, working closely, making sure the First Nations understand the project, making sure the government understands the benefits of the project, And the net result is you get funding for your road. And I mean, that was the first part of the road, but the overall funding package is actually 100% of the cost of the first 100 kilometers and 30% of the cost of the next 100 kilometers. It's a total commitment from those governments of $130 million to our project, which is obviously significant. The next, the latest, and this, I'll be honest, is a game changer for our project, is looking at, what we can do to bring green power into the project. And so our project, that feasibility study, those returns that I showed you are based upon us generating our own electricity using liquefied natural gas. Why are we using liquefied natural gas? Well, there's a grid in the Yukon, but there isn't sufficient power in that grid to power our mine. The other problem with that grid is there's not sufficient power in that grid to power the Yukon. They're running out of power in the Yukon. There's now 22 rental diesel generators. They just added in 5 this year. They just keep stacking them up because there's no long-term green sources of energy. So the solution is to connect the the Yukon grid to the British Columbia grid. That kicked off this year. It's a big initiative with the government. We're part of that discussion. If that was to happen, that brings grid power, which should halve our power costs. Plus, in our project, we pay a carbon tax because there's carbon tax in Canada. That carbon tax would be eliminated as well. This is an absolute game changer. It takes a project, with a 2.3 billion and 18% IRR and makes it a magnitude better than that. I mean, this is an absolute game changer. Expect lots of development here over the next year. Right now we're in permitting. We expect to get our application in next year. Once we get our application in next year, it's really 3 years until we can begin construction. We've got a great team based up in Yukon that we've put together. We're working very, very hard on this. This is the big push of where we are right now. But certainly at this point in time, everything is on track for a submission in 2024. Last little bit, just talk a little bit about the area. We're, and you can see the map there, we're shown in the dark brown. Right next to us is Newmont and the coffee project, and everything in blue there is White Gold, which is backed by Agnico and Kinross. This is an exciting area. Lots of mineral, projects. Coffee is actually all the way through permitting, so this is an exciting project here. This is going to be a camp moving forward, and we're obviously a key part of everything that happens there. A little bit about value. When I look at our peers, and certainly there's some outliers, but the Marimacas and the SolGolds, we still have a good chunk to move to be equal to our peers, and so certainly represent an investment and opportunity, and right now a real investment opportunity. Markets being beaten up are investment opportunities, and that's exactly what we are. Another way to look at this is cents per pound of copper equivalent in the ground. And by that metric, we look very, very attractive as well. So to summarize, this is a significant copper gold project located in the Yukon. We've got our clear path to unlock. What are the highlights here? Well, we're talking about what's next with Rio Tinto. We expect an announcement on that before the end of the year. Looking next year to submit our EA proposal, also working through some of that technical work with our technical committee, which is Rio and Mitsubishi. So expect some results from that as well. Thank you very much for joining me. And if there's any questions about the project, feel free to go to our website and reach out to us by the contacts that are listed there. Thank you very much.